By the way, if you're enjoying the content so far, hit the thumbs up button. If you don't enjoy it, hit the thumbs up button anyway because my name is Rainer Teo. So moving on in this section, right, we'll be discussing about the different types of trading methods. As a stock trader, right, there are different ways to skin a cat. You can be a day trader, a swing trader, or a position trader. So let me explain to you, right, what are these type of different trading methods and the pros and cons, right, to each. First and foremost, right, day trading. So day trading, you're usually trading, right, below the 1 hour time frame, possibly the 5 or 15 minutes time frame. And your goal as a day trader is to capture the intraday volatility, right? Most stocks, right, I think we pretty much move about, 2-3% a day. So as a day trader, you're trying to capture this, intraday move of the stock. And you usually exit your positions, right, by the end of the day, right? Before the market close, you would exit your position. So there's no so-called overnight risk for a day trader. So the pros of a day trader is that you can actually, be profitable on most months, right? If you're good at it, you have an edge, right? You can make money on most months, even generate full-time income or a career out of trading. The downside to it is that, day trading, it's stressful, it requires lots of screen time, and the opportunity cost is high, really high, because, you spend so much time day trading, and if you don't make it, right, the opportunity cost, right, it's possibly 5 figures or more, because you could possibly be working elsewhere, a full-time job making maybe 4,000 a month, right? If you for a year, that's like almost like what, 48-50,000. So if you go into day trading and after 1 year you don't make it, you can see that your opportunity cost is easily 5 figures. So bear this in mind. Okay, so this is day trading, and what you can expect. Moving on, swing trading. So swing trading, typically you operate between the 1 hour and the daily time frame. Okay, the role as a swing trader is that you just want to capture one move in the market. So let me explain. So for example, let's say the market it's in a range, okay, and market swings up and swings down. So as a swing trader, you possibly look to buy near the lows of the range, and as the market heads up higher, you exit right before the highs of this resistance. So you can see that in essence, right, as a swing trader, you're just trying to capture this one piece of the move over here. So this is just an example in a range market. Similarly, if the market is trending, you just capture that one wave of the trend. Okay, so that's what I mean by one move in the market. So the pros of swing trading is that it's less stressful. You don't need much screen time because you are trading off the higher time frames. But the downside to it is that chances are, right, because of your lesser frequency of trades, you won't make money on most months, right? If you're good, possibly you can make money on most quarters. And another downside is that you will not be able to ride trends, right? Because as a swing trader, you're just capturing one move in the market. Let's say, if the move, it breaks out higher, right? You're already off the trade. So, that's a downside that, you won't be able to ride a trend. Okay, and finally, right, position trading. So position trading is I would say it's the longest form of trading, is where you are largely trading off the daily and the weekly time frame. And your goal as a position trader is to ride trends in the market, right? Basically, just to illustrate, right? So the market, let's say it's in a range, okay, breaks out, starts to trend, then it reverse, right? So as a position trader, your goal is to capture this meat of the move, right? The meat, the bulk of the trend, right? That's what position trader tries to do. So the pros is that it's least stressful, doesn't require much screen time because you're trading really the higher time frame, the daily and the weekly time frame. And how often does one candle paint, right? For a daily time frame, every 1 day you get one new bar. For a weekly time frame, every 1 new week you get one new bar. So you can see that really there's really not much thing to do besides sitting on your hands for a position trader. The cons is that you need patience. You need a lot of patience because it takes time to see results, right? Position trading, you would have the least number of trades because trading opportunities don't always come. Okay, and naturally you need more time to see results for a position trader. So with that said, right, let's do a quick recap, right, to the different trading methodologies that I just covered. Day trading, you are looking to capture the intraday trend. Operating below the 1 hour time frame, your trades usually last for a day or less. Swing trading, you operate between the 1 hour and the daily time frame, anywhere in between. Your trades usually last a few days, maybe sometimes a few weeks. And last one is position trading, usually operating on the daily time frame and higher. Your trades, right, will last usually weeks or even months, or even you capture the really long-term trends, can be even years, right? So these are the three broad-based trading methodologies that's out there, okay? And with that said, right, let's move on.